Hello, I'm Brent Wilsey. With me is Chase Wilsey. Welcome to today's Smart Investing Daily Briefing. Well, today we're talking about, can this bull market continue? Some people are saying, oh, the market's too expensive, it's over and so forth. So we want to show you in numbers and in graphs that things aren't too bad. First off, 2009, we had very low PEs, very low price to earnings ratio. We got very, very low. We've come up a lot since then, but you gotta remember, we started at a very low bottom. And we've talked about this before, how some companies are overpriced. And you have to understand the S&P 500 is market weighted. So these bigger companies like Facebook and Amazon and Google, they take a lot of weight and their PEs are, some of them above 30 to 40 times earnings. So that's gonna hurt the index, making it look like it's too expensive.
Exactly, and key word here is some companies are overpriced. There are still many great companies out there that you can find at a great value. We always like to try and find those great companies. And the other thing to remember here, the economy remains strong. People, oh my gosh, no, the economy's not that strong. Well, it's okay. We keep saying it's okay. We keep seeing new home sales. We see motor vehicle sales are good. We see all these great things in the economy. So we still see the underlying economy is still strong enough to continue with the bull market.
Exactly. And for those of you that aren't sure, don't believe the numbers, let's take a look at the graph.
Yeah, and as you can see here, we take a look at three of the longest bull markets in history. 1949, you see here. 1990, that's the tech boom, is that long bull market, is the gray line here. And then finally, you can see the 2009 bull market we've had. And as you can see, at the point right now, it's still well below the other bull markets that we saw before. So we can still see a run up according to history, especially with a strong economy.
Yeah, very simple. Stops here, these two and on. I think that's pretty easy to see. We have more to go. For good companies, and again, be careful those high price ones because that's not going to help you. You got to find the good quality ones, as we talk about. Want to buy around 10, 12 times earnings. All right, speaking of that, let's look at the company today. Company today is Microsoft, and you can see the current price on 52, the high for the year 56.85, the low 39.72. You can see the way up here now. I will point out that I did look at this company back in the mid 2000s. Great valuations here and here. Well, now let's look at some numbers, see what they look like now.
Well, real quickly, this is from the tech boom right here, and you're still not at the point you saw at the peak of the tech boom. So 15, 16 years later, still not there.
And that's what everybody's talking about, like, oh, Microsoft is the next big thing and so forth, and no one can be Microsoft, Facebook. Oh, I meant to say Microsoft. You can interchange those names, can't you? Facebook, Amazon, Netflix. Same thing back here. Look what happened. As you said, still not back to where they were. Numbers, sales down 8.3% year over year. Earnings per share fell by 45% year over year. And we can see for June 2015, the earnings per share fell by 40 cents. The reason for that is Microsoft overpaid for a company called Nokia many years ago. They had to write off $7.6 billion in goodwill. That's why we look so hard at goodwill and intangibles, because this happens to you if you don't look at the numbers.
Yeah, always important to understand what you own. Let's take a look at the balance sheet here. Current ratio 2.9, great, very liquid company. Debt to equity 62%. Nothing that really scares me off from the company. However, looking forward, June 2017, estimated earnings per share on a GAAP basis, $2.75. Gives us a target sell price of $45.38 below the current price. So Microsoft is overvalued right now.
A lot of hype about it right now too, but again, based on numbers, not a good buy. Well, let me ask you, are you happy with the return on your investments, on your money? Maybe you're not happy about your current advisor. Well, that's what we're here for. We love to talk to you. We've been managing money successfully for over 30 years.
Yeah, you want to give us a call? Phone number here is 858-546-4306, or you can contact us at our website, smartinvesting2000.com.